MT5 because my other computer, the power supply died. So I wasn't able to log back in. So I had to break out the laptop and do a MT5 because I was grabbing a demo and it said, do you want to download MT5? I must have hit the wrong button. But it is a great tool for time frame analysis because it allows you to run the same time frame you would on the scripts, because the scripts are capable of the same time frames that, although not past the not that 1, 2, 3, 5 minute stuff, but the 6 hour chart, which is a nice 4 bars per day situation. And if you're going to do breakout trading based on volatility of highs and lows, and you want to be dialing your tickets in to match the volatility of the market, because you can trade with 5 pip stops, but not when the market's maybe jumping around 10 pips and it's lunging 30 pips, but it's the dynamic range of the market is going to determine what kind of trade plan is acceptable. Because if you're really running a hard stop of 10 or 30 pips, and you're saying, well, my risk is always 30 pips, the market conditions may not warrant a 30 pip stop, and it may be completely acceptable to get in with a very wide stop and actually go underwater on the trade, depending on how much you want to hold through a swing of, say, 3 days. Now, if you're in for 3 minutes compared to 3 days compared to 3 hours, here in MT5, you're allowed to go to the 3 hour chart, which is, I'm on the 2 hour chart right now. If I go to the 3 hour chart, the cleanest story is going to be on the higher time frame of what's going on structurally from a price pivot and closing prices. And it becomes very obvious on the higher time frames. And if you go too high of a time frame, then you've eliminated too much of the story. You can't just go pure, like where the guy just tells punchlines, and you're supposed to know, everybody knows that joke or something. And you don't, but if you're trading one instrument, and you can see the 8 hour chart, you can see what the 8 hour structures are, and go to the 6 hour, and the 6 hour reveals a pivot that is not available on the 8 hour chart. And this is only available on the 6 hour chart, and only available when the market flags out here and goes sideways, and there's a big drift here where, but there's still a subtle refusal to make it past this last bottom that's now becoming resistance twice in a row on the 6 hour chart, but not really. It is on the 8 hour chart though, actually. If you go to here, you could make the argument of this faint bottom becoming a top. One single bottom becomes a double top there. On the 6 hour chart, it's a little more clean, and there's a little more definition to the pattern. So the pattern definition on closing prices, I'm not talking about patterns on bars. Well, on bars, but not on candlesticks, because I'm saying this is purely trading at the market trading here. You have to pull the trigger and sell here at this structure level, or you put a sell limit there, granted. But you're running super tight stops during this session here, and if you turn on the bars to reveal the actual drama involved before each beautiful closing price, because it's so smooth, you've taken all the noise out, all the racket. It's like at the end of 6 hours, tell me the price, and you're like, dude, it's the same price. But what about that 30 pip wick? Let's not talk about that, okay? That's what blew the account up last time. So here you see psychotic wickage, okay? Like, I don't even see this. Let me draw a line on that. I guess I should take into account all tops and bottoms. So if you do the wax on, wax off, which is the candles on, candles off. Now, if you go to line chart, it kind of reveals the true structure, the true X-ray, the true price range on a frame by frame, price over time basis. So that's a different view of reality than the wick. Because the wick is just like, this looks like just like nothing's going on. And this is also, well, this line is from another past price story. So that's actually because of this back here. I must have that marked off on another, it must have been a low, but really this should be tucked up a little bit. Let me see if I can repaint the size of this. Not used to MT5, so having a little system adjustment errors. Okay, I'm going to take this as a true support here at this bottom on closing prices only, becoming a pivot. I'm cheating. I'm trying to treat this like a trend line. Just turn my box into an actual. So this bottom here, we dip below it, and a lot of people jump in here for the new closing low price over time trade, right? So a market bot would get in there if it could see this low as being the last launching pad for the big kahuna move, which is a flag. I'm sure a flag lives inside of here. To confirm, we would turn on. See, now, this is why people are blown away by the volatility of this. Had you bought early on that, you were right, and then you were wrong. That is a down bar that's wicked into the top. So it's a very deceiving. This is almost like putting a 3-period moving average on too. This is a 1-period moving average of just closing prices. So when you turn this on, you say, but wait a minute. And then and this is where a lot of people get crushed on a pullback. If you bought here on close, and when the market goes into the next session, it just so happens you're taking these snapshots every 6 hours. Now, if you go to the 4-hour chart, if you are trading literally, okay, the entries I'm talking about here are against the market. So if the market's going up, 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 the first time it pulls back, you need to buy that pullback. You're going against the new downtrend. It went down, you're buying. It goes up, you're selling. So it's not to say that also volatility matters. If it's a small pullback, you're getting in very heavy with a very tight stop, with extended take profits if you can perceive that there is clear water above you into the future. Here, there must have been something that made this go through like Psychoblastville. And that story probably lives on the daily chart, maybe. I don't know. Go to the daily chart. Okay, yeah, it's crushing into this window. So this was a big, rambunctious move. Anything above this closing price, I mean, I wouldn't get any more fancy than that. Now, that is a 60 pip window, and I'm sure that this is not the high. I'm sure there is a wick above that. Not much. But see, the funny thing is, if you want to back test something, I hear this back test. Okay. Just look at the structure of, would this be a valid trade if you were to get in based on the market coming back to your pending limit order, say. Now, you could also use this for your limit trades too, but it really is one of these things. If you are on the 1-hour chart and this thing is down and you are there, because you already know that this is a top, and this is a great place to buy at the end of the day, or you just got filled and you're up on that trade. Because if you look at this, you're up on that trade, right? If you bought that plunge, you're up on the trade. Just a few pips. We got a 20 pip bounce at the end of the day. From the daily trader standpoint, okay, I'm gonna shift gears now. I'm gonna go to volatility breakout trading. Imagine your only criteria for entering the market is going to be, what is the range of the day? It's a quiet day. Let's get in. And we'll just break out and go with the last known trend. So if the market was going up, if the market's going down, and we pull back a little bit, we have a range right here now. I'm going to switch gears back to the closing prices. So the closing prices are, you can see exactly what's going on from a top become a bottom world. And if you believe in tops become bottoms, say you can see this, imagine you can see this top. Even after the market is down here, you can still see that top, right? We see a double bottom here. In a closing, in the world of getting in at the market, as soon as we go below this double bottom, you have to be a buyer. Now, people would say, yeah, what about the time it keeps tanking? Well, hopefully you've got another account or you're going to stop. Or you got another go-to account. You're like, yeah, that's... There goes $1,000, or there goes $10 million, or there goes... I mean, that's what's funny about the people that hate Trump. It's like, well, Trump's a guy that doesn't give a fuck, right? He's a trader. He's like, yeah, let's go. Like, who's not buying below here all next week, right? In some manner, I'm a buyer down here, right? This is all buy territory. Structurally speaking, right? This is just as easy as you can get is closing prices. Now, if you turn on the bars, you're like, wait a minute, just wait a minute. I see different opportunities based on volatility that I don't see on the timestamp, turnaround, price pulse, Elliott wave. This is Elliott wave. This is reality of what if you're in really big? And what if you're running a trailing stop on the daily chart? And what if you sell oh geez, I don't remember how to close down this program. I just realized the controls disappeared on that. Oh, here we are. I don't know if that's on the screen or not. Lost my tools. So here, just because I can't draw with this MT5 things drive me crazy, but you know, not a lot of these trade plans are going to work very well. Here, if you start running on the dailies, you know, you're looking to get long here because of a breakout up, say. Right. And you're looking to sell on a breakout down. You're just going to get your ass kicked on that. You have, I'm just saying, if you want to make money on different levels, scalping, swing trading, right? Because we all know the riper trade is to just put a buy limit down here and get picked up on this raid into this hole, right? Sure, there's a trade inside of some flags setting up here for this trade. But there are so many ways to trade the market, okay? You should be able to see which strategy the market's asking for at the end of every day on the daily bar charts alone. Without going to an indicator, you should be able to say, well, it's a quiet day today. Okay, it's time to put in a different strategy. And the longer it's quiet, the more we're setting up for a serious move that people are boarding the wagon on just by default. And how can you see stuff like this? This just keeps teetering, and they have not broken 4 days of nothing. this was the opportunity for the first stop hunt for people to really load up on this thing to go north. And this would have been the trap entry for the confirmation buy stop people. I'm just speaking in the most crudest entry terms that everybody's read in a book, supposedly. That if you run a trailing buy stop looking for confirmation, you get filled, you are assuming that this top is now a bottom and this is going to go to the moon. That must be your argument. Something like that. Or you just stop hunted this guy, you picked up some people that ran two-sided stops, you're not an idiot, you're going to buy this top became a bottom. And you've already scalped out. Okay, if you can scalp out of this and realize that this there's no way that the market is going to fit your scenario in this kind of Hannah Forex, move. It does happen, right? Like you could have said that up here. I got in here, I sold new highs. Like I'm crazy, right? You're a crazy person. You're selling above here, dude. It's going up. Are you fucking an idiot? It's in an uptrend, and look at my 20 EMA. Are you fucking nuts? How are you selling up there? And then other people are like, well, yeah, I took profits up there. Well, yeah, you're probably getting out because you realize, hey, the party's over. We just went above here. And then this top becomes a bottom on wicks, which you don't see this trade on closing prices either. The idea of tops become bottoms on wicks is completely different than tops become bottoms on the line chart. So the line chart is a completely different story. I mean, you just don't even think about volatility, although you can see it's flatlining here, but you don't know the wick story. So for me, that is the problem. I don't see that this here is, there are wicks stacking up below that. So if we take and draw in the wicks and then pull them out and go to x-ray mode and look at the patient with just the pure price structure. So let me put the wicks in the drawing mode here. I'll just bracket the wicks off here. And then we'll just go to the line chart and look at that. It's hard to imagine trade plans if they really are strictly based on trailing stop entry for confirmation purposes. And you're also kind of like you're going with the stop hunt, right? You're going to start to feed in with those people. As they clear out the stops, you're riding that stop hunt wave for a burst move. And that would probably come to an end at some point. The question is, do you come in and buy and go the other way? Or sell? Vice versa. What do you really do? I mean, what can you do? And after the move's over, there's nothing you can do about saying, well, this thing looks like it's... I guess the problem is not getting sucked into a move that has a space limit that it can go into. When the market just gets into this overextended 5-year high, 8-year high, 5-month high stuff, you're going to see people take advantage of the fact that that is insane pricing. And also you just run out of people, and you're also in no man's land. A lot of people don't even want to get in there because, or even out there, they're still holding it maybe. We don't know how many people are long or short, and that really wouldn't matter. The sentiment thing is just a joke, because how can you import the laggy big time frames on top of this chart? If my trade plan is based on me putting in sell stops here religiously and buy stops here, and the closing price keeps dicking around, isn't it better for me to pull the trigger here with a very tight stop? It could also be based on here, and maybe I do have sell stops here and buy stops here. So when they stop me out, of my trades that I take in the wrong direction here. And these have very tight stops, maybe. So this whole thing, everybody's trade. So I heard this Sean Lucas talk about this. There are so many people in with so many strategies during this phase that, once they're triggered, just like this, once you get these really like a pennant, right, or a flag, or this tight zone here, you get this tight zone underneath this floor, or even, there are people like me that would buy this all the way to here. Okay, I like to just buy this whole area down in little tiny orders. I like to fill that up because I don't want to have to think about, oh, is this 618 to the 258 to the 3? This probably is like a 618. In fact, this looks like the dinosaur trade I did last week, where this is the mouth, this is the foot, this is the tail, this is the dragon entry, actually. You can have it like that, sure. And that people would probably subscribe and buy that course, the Gartley thing. I'm like, dude, you got to come up with like the dragon dick trade or something. This guy's killing people. The dragon serial patterns. This is a serial killer entry zone, dude. How do you know? Well, there's, how many stops just got, how many dead retail traders kept moving their stop. Not everybody's moving their stop back, dude. I just give the market more room. Okay, I move my stop back. They stopped me out, and then it went up without me. Anybody do that trade? So we've all done that trade. Okay, so that's maybe not helping, but the volatility must have something to do with this. And if I change the time frame, maybe I can get a clue here. This is the daily chart. Now I'll go to the 12-hour chart, which is half of that. And the trailing sell stops looks like the winner trading strategy here. From just a real serious breakout. I'm gonna try to compensate for the. So the daily makes this a monthly separation point, and the 12-hour makes the vertical lines separated at the weeklies. I think we got to get to a 2-hour chart. We got a daily separation. Okay, so there's a 3-hour chart. Now, I just don't think that unless you trade one currency pair, you will be able to take advantage of the 3-hour breakout trade. Maybe you're doing it. I don't know if you are. Please post a video of you taking those trades. I guess you could go every 3 hours. You'd have a robot do that. You must have to you can hire a coder to write a 3-hour bot, right? He's going to look at every market on a 3-hour basis. Like here, I'm going to put up this is the only template I've written so far. You got to wonder when people talk about this algorithm that they wrote with indicators and how it's going to do this, that, and the other thing. Certainly if you had the patience, this is the dollar yen on the 3-hour chart. And this is why I really don't like directional candles, because really what's going on here is the range that keeps on getting tighter and tighter. This is a really funny currency pair because it's so cliche in a way. Some of the setups on this currency are stupid. So you see inside here, I can see a triangle on closing prices there. Gosh, the more I look at candlesticks, the more I hate them. So we see this beautiful triangle, and this dollar yen is capable of amazing triangles. Let me get this color changed on this tool a little bit. Oh, jeez. Yeah, that's just not going to happen for me, is it? Right. Just can't move the mouse. Like one piece, you're gone. Okay, so this is Here for all the Native Americans, moccasin color. Hold down the control key. You can copy that and make channels and stuff, but I'm just going to do the, this is what I'm calling the triangle, is the higher lows and lower highs. I feel like I'm building a nest. So there, we see this beautiful 3-hour triangle, and maybe a little bit on the 4-hour. Not so much, but 2-hour must be a little bit. Okay, the 2-hour triangle to the 3-hour triangle. Slightly more, let's get this rectangle out of here. That was just to block off the area. So this is a really subtle story. The launching pad here, if you're just trading one currency, and you can babysit these things on a 2-hour basis. In other words, every 2 hours, you're looking at the chart going, oh yeah, we're right in the middle of the accumulation phase or distribution phase of a triangle, and we really need to get the fucking heavy with a tight stop, a kind of wide stop, but you don't want to run wide stops when the market's quiet, because you're just really kind of saying you don't think there's going to be a spike because you put in a wide stop, and they could come after your insanely wide stop. And even if they don't, your drawdown into that halfway to that stop, if it's a 200 pip stop. Right? So you can't get in too bold, too big with a wide stop. I just don't think that's financially prudent. Even Forex Hangout guy would agree to that. That you don't want to risk your whole account on one idea. So these are all tiny ideas stacked up to create a giant idea. It's a more stable system. It's harder to blow up the account if you have little tiny orders and different strategies running. You've got the sell stops, the buy stops, the market orders, the limit orders. You've got no orders. You've got when the orders disappear and the market crushes down. You're not involved in the 12-hour sell-off because your orders disappeared after 4 hours. Maybe you caught a little bit of the fallout, a little bit of the extreme volatility from your limit strategy, but this is why your weekly orders have to be smaller size than your 4-hour tickets. The 4-hour tickets can be bigger because what is the chance of fill when your pending's going to be gone in 4 hours? The auction's over. You created your own auction on one ticket. So the same auction theory, it has no place in the market. Dude, these are all timed events. They're either going to be an acceptance or a rejection of price. People are either going to go for that price, and it's going, gone. Going is the triangle. Gone. How could you say this is not... Auction theory has no... Besides, how about the theory of relativity? Whatever, theory of anything. Music theory. Is that really... Should we have music theory? No. There's no place in music. Okay, it kind of doesn't if you've had a couple beers. It doesn't really have a place. But it's like this thing where you can recite the alphabet. I don't know if you memorize something, I guess you can blow through those numbers, Like you can get that stuff done. And of course now we're in this touch tablet. I'm using the tablet since I blew up the big computer. I'm like, I kind of like the tablet thing. So I've been living off the tablet anyways, so I kind of didn't trust my computer. It was doing weird stuff. But it is a different mindset. When I used to trade on a HTC phone that only had like 800 pixels or 600 pixels wide, 800 pixels tall, that was like the best trading chart in the world because it was literally, you could go to the next time frame in one thumb move and just get this nice snapshot. That was beautiful. this tablet stuff that these Android things they have now is so ridiculously overwritten. Like there's too much shit popping up on this, and maybe because it's a cheap phone or something. I'm not sure if these are menus or ads that's going on in Andrew. I'm gonna have a system called Andrew instead of Android, and hopefully Android will. Dude, um, but yeah, the story on the uh, 2 hour chart is very interesting. It's one better than the 1 hour chart. But you really have to babysit this. You know, you have to say, where are we right here and now? Is there any trade I can do even now? And there is not always a trade on the line close chart or clothesline chart. Now, the story of tops become bottoms here, the most precise entry, the apex of the 2 hour triangle. Well, the launching pad is here. This is the last known in Elliott wave. This is wave 2 if you're going to start your count here at 0. I'm assuming this is 0. We have a double bottom. So the story is like a little double bottom. It's like you're building a bomb, really. So if you were to build a bull bomb, you would need to have maybe a little bit higher closes on lows, little failures, swing down. It's not tanking as fast as it used to. The funny thing about the market is it's the resurrection, right? It's the death and the resurrection of a market. And when it's dead, it's the time to get in. Not to be necrophilic about it. The time to get in is when it's dead. Oh, it has a scheme. I didn't know that. I have a little learning. Still trying to figure out MT5 here. So I'm having a problem. Okay, so we want to fix the scale here, the scale fixed is not good on MT5. It has issues. It really does. It feels like when you try to load Bitcoin. Okay, so here, another thing is I'm going to drill down into God knows what the spread is here at this level. But it's a very subtle story on the 2 hour chart before this huge launching pad where it's just off the chart. Like literally, if you're dialing into the 2 hour triangle, okay, let's just take the anatomy of this plunge here. So this is the classic fall out of bed scenario, Delrian, which is a great currency pair because it is so insane. And these Japanese people are out of their mind. Let's face it, dollar to United States is harsh contrast. We are so different. Europeans and Americans, I think they're pretty close. And maybe that's why fundamentally this currency is insane. And maybe it's because of the way it's priced. I don't know. And look at 618 just showed up again. I hate to point this out, but I think I'm being trolled by Fibonacci. Mr. Fibonacci, the ghost of Fibonacci. 618. Kind of trained for that now. Oh, jeez. Good thing I only memorized certain numbers. That's a good thing you've done. But this is such a subtle story. Look at this launching pad here. I just noticed the subtle little top become a bottom here. Comes back, retests. Nobody can take it below here, but not nobody, because I'm sure that if we go to the line chart, which will reveal the true market, I think, because this is an idealistic view of price structure is totally so perfect, but it doesn't take into account how tight a stop you can run during these windows of opportunity. So if you say that this is a breakout point, Okay, actually closed above that. There are people that would buy on confirmation. If we closed above this, and maybe some people who are a little bit more conservative are waiting for it to close above here. No, these are confirmation traders. There are people, trust me, that are long from anything below here, and they are still long. Anything below there, right? And they cashed out because at some point in this scenario, we know on closing prices here, we know in a detective manner what had happened here. We eventually, at some point, came to here. I know it is true that we could have wicked up insanely and taken that out, and that would disprove that. Would disprove that theory. This bottom is supposed to become a top. It overshoots, and then it finally comes back, and then volatility's drying up. We're getting this 2-hour chart. So a lot of noise, but there is a lack of volatility, which means there's a vacuum forming here, and there's one forming here. Not to mention all of the tickets that all the people that may have bought this plunge, and they knew that this was their exit, and they're okay getting out, even though it doesn't bother them psychologically that maybe their first ticket's here. So eventually you realize that buying here at the first breakout point may be okay for a scalp to here, but if this is a real breakout, and I'm sure on the 15-minute chart, maybe there was a comeback to some 15-minute double bottom inside of here and then it plunged. That looking left, we know there's a giant hole here. We already know that. And would you join the train south on that with a trailing stop protecting you? Yeah, but at some point you've got to get out of that because you're coming into the deep discount window that everybody would just love to buy as it just keeps on plummeting, and be every trader, be every woman, Shaka Khan. So be every trader and buy this and maybe do scalp to a Fibonacci bounce out of there. Okay. Even that's better, right? If you say you see the market's there and you're going to buy in pullbacks, instead of buying here at confirmation because we just went up, is how about we just put buy limits below here and capture this in some manner and scalp maybe some of that to here, and maybe you're out, or maybe you're still holding, and now you have to dial in your trade plan. Your trade plan needs to fit the market's behavior at the moment. And maybe on the sell side you're putting in shallow sell limits, but that takes out with short stops there. Again, somebody asked me, what do you do about a stop? I got multiple stops in there. Insane. I'm just keep writing more and more on the tablet, although I can only write 3 at a time because it just drives you crazy. Well, I have to get used to this touch and drag shit. I just want to punch the screen with a hammer. I would prefer like a chisel and granite for my scripts. Like, let me just chisel this out for you, buddy. Like, we're going to typeset that and get out the mimeograph. I'm not even going to, the feeling of a pencil on paper maybe is what I'm missing. They need to get a touch screen that's rough. Then I would be on board. Make it sandpaper. So I know I'm there. And I don't know if I'm making any sense, but there's so much going on in this right here. You could just go on all day about all the kind of ways you could have traded this at the market, against the market, at the market, which I would call my microaggression, micro-contrarian trading, I call that. A tribute to microaggressions. This kind of where we get in and pullbacks very based on the kind of rate of it. So this is a daily chart in essence because my vertical lines, I see 5 days here. And this must have been where a lot of people were getting in and out, maybe. I'm talking about winning traders, I guess I'm hoping. Let's only refer to winning traders here. Let's ignore the losers for now. Of course, we have very tight stops on our losses. We hardly notice them. I'm really not. Okay, so if I was to do a more of a hedging process, I may be over trading at that point. Because if I'm going to scalp out of my shallow entries with my tight stops and I have a tight exit, I'm running that so-called algorithm on top of my swing trades. And my other various, like, this is a don't miss trade. There are don't miss trades out there that are right around the corner. We all know that if gold comes back to $1,300, there'll be buyers. Just from that sheer number. If you quoted that, you say, Bitcoin just dropped to like 8,000. Of course, people will get scared if it keeps dropping. It gets to 7,000. Now it's to 5,000. Now it's like people are like, wait. It's dropping too fast. This is not the shallow pullback. Well, you're not running a shallow pullback strategy there. So when the market goes really big, you got to go big. So you have to step away. If the volatility is too high, this is why people say don't trade the news. Yeah, because the volatility could extend past your. If you trade a mini lot all day long, strictly, because it's more efficient, right? If you think you're right about the trade and you don't mind being down $20 instead of $2, then okay, you go for it, right? But if you just went for a 2K or a 3K, so 3K, 3 trades, all of a sudden you're in 9K. It gives you more wobble room if you're going to do this Lucas Sean guy, where you just go, let's just trade. Let's go for it, man. Don't be afraid. Or you're going to get so analytical that, you have to have all gauges set, all indicators qualified, back-tested, recertified, vetted. And also don't forget to get the dogs to sniff them for any explosive materials. I guess I shouldn't even say that phrase. Somebody was in the coffee shop this morning and they said to me, you can't say the BOMB word. I said, so I said that this girl that came in this morning, she came in, she sat down, she went out, she came in, she sat down, I go, she's casing the joint. She's going to explode, do an explosion in here. And she did look like she was from over there and that she had this wild look in her eye. And I don't know. Then we talked about people sleeping in Starbucks, which I think would be great to be a fake sleeper, get a GoPro and be a fake sleeper and do a viral video. So that's out there. It's a free offer for viral video. Get a GoPro and act like you're snoozing, like hard. You're like, actually you brought your snoozing gear. You know how they have that thing these contraptions that help you stop snoring. You bring that into Starbucks with you and you just plug in. And you're like, dude, I got sleep apnea and I'm tired. So you don't mind if I turn this fucking loud machine on. I don't know how quiet they are, but turn that machine on, let it go. Okay, but I'm getting off topic again. So I think if I was going to say, what is the easiest way to see the narrative of the market? And this also reminds me of that thing where you have that bat and to see who's going to pitch or hit or something, you go hand over hand till you get to the top of the bat and you can only do like the claw on the top, right? That reminds me of the formation of this triangle here where it just runs out of rope, Nobody's willing to take the ball, and finally we get a kickoff, and it's not really a great top bottom. It is a breakout, pull back to the trend line. Another guy was asking about, well, what should I make of these trend lines? And of course, if you're a real purist, you'd say, well, it broke here. But if your volatility view is that, the true apex of the triangle is here, you broke out, you pull back, and then you're off to the races. And then there is the subtle. Here is where a unique trade plan comes in for a 2-hour robot or a 2-hour trader. You see a subtle pullback here. That is your call to arms. You're like, you know what? Oh, of course, don't forget there are people selling here, because don't forget this is a rally in a so-called downtrend. At some point, you have to be aware of the larger picture. Do you really think that after this failed sell-off from here, when this fizzled out, okay, maybe, comes up here and now the sellers really come in? I guess that's possible. And we could probably find instances where that happened. But if my actual trigger, my actual signal, and of course you couldn't do a signal service on a 2-hour bot. By the time the guy gets the message, the market's like up here in the ozone layer. Oh shit, I can't draw on that. Wait, I blew up the. I'm gonna really slow tail it. So I'm on this some kind of Windows 10 machine. So probably the government's hearing all my stuff right here real time. All right, so here is the triple top. A lot of people probably sold this. Oh yeah, man, it's gonna tank. Of course, at the end of 2 hours, they're like, well, it's not tanking. This is Asia. Then we get the breakout in Asia. We fill this hole. The sellers would come in naturally a little bit there. And then the problem is this giant hole that's left above. And the fact that we're not tanking into this giant hole, that's an issue that's causing you this triangle. It's just all this big picture thing. How many times are you going to see this pattern just like this? No. You see maybe a similar snowflake. And we could just go to the 3-hour chart and go, okay, a little cleaner view. And now, what do these lines mean now? And then you start to notice stuff like this, which I noticed. I just couldn't believe what I was seeing. Is that when the market closed below here, seemed like the time to get in on the 3-hour chart. On the 4-hour chart, the time to get in. This is a retest of this price. In price only. Without regard to time. How long did it take to come back to the starting gate on that before everybody could try to go long again? Was this the breakout? Were people hoping for the sell-off to protrude into this giant hole here and just start crushing down? Like this came flying all the way back. And what is it like for it here? Is it going to keep tanking through that? It could, and it has. We've seen that move. Here, another come flying back to this starting gate, right? It's just amazing. And this is a quieter pullback, which means more people are buying this pullback than bought this pullback. This is a nice pullback, and it's closing prices only. Come in, get in. Come on and get it while you can. Retest again, then a retest. And people are like, but we have seen it crush. You cannot say that this does not happen. Because it happens time and time again. Like here, pull back to retest. Uh-oh. Something was more pending and looming. That hole there. This hole gets filled. It's satisfied. We are done with that. To me, this doesn't mean shit into the future now. All that matters is this now, this wedge. I think this is all that matters now. I'm pretty sure. Market can no longer see this pivot. It cannot see that. There's a guy called the Forex is so darn easy guy. And he talks about like this. Okay, this double top still does matter if we haven't taken it out on wicks, right? If this was your entry, this double top mattered to this pullback. But if we should crush anything below that, it just wipes out the significance. This top still matters forward. This still matters if we have not wicked into that. So starting point is always going to be structure. Would I buy a retest of this? I sure would. Will we ever make it back there? You just never know. If you think that the dollar yen is going to keep going up, and of course in the other trade I did was on the weeklies, when I asked the question, are we going to keep tanking? No, we finally made it back to the floor. Now, did you get out of this thing? Look at the structure exit. That was the scalp. Then we had the psycho plunge. And we've come back to this big contention point. Will we engulf? I say we do. I say the dollar is going to kill the yen now. It's going to crush it. And you could say it's geopolitical. You could say whatever. This is psycho, unfair value. And it's just not right what they've done to this dollar yen. We've rejected this floor. We've already engulfed that. I think we're going to keep pounding until we get to at least and just anywhere in here, this bottom. This bottom still matters. And so does this most recent bottom is the ultimate exit for the scalpers that want to just take advantage of this momentary lapse of reason and prices. We come back to reality. Inside the folds of the standard deviation, fair value into the homeland of all this price up in here. But for the big picture, on the weekly, that's an amazing thing to go below the beginning of the year here and this come roaring back. And this may be, you could say later on, oh, this is because of North Korea or whatever, and maybe there is some type of there's a black market. Okay, this is the thing is, there's a black market. It's called Bitcoin. Okay, there's a real market called Bitcoin. There is a free market. Why does black have to be free? Black markets matter. So, this is a truth, and you can kind of see it in the chart, and of course you can also see the extreme valuations that make no sense from people that think that, okay, another problem is that maybe people are saying out of confirmation we're going down, we're going to keep going down, and maybe they're trapped short on this dollar yen right now. And I got news for you. No, it could be the end of your life as you know it. So you go to the monthly chart. If you're going to stay short, I'm sticking to my guns. You can't see it's going down. I think I lost my monthly because I put too many time frames on here. Let me customize this. I don't think we need to see the 5-minute chart, the 12-minute chart, like, or the 10-minute chart, right? I'm just going to stay here. The monthly's got to show up here. The monthly dollar yen. Look at MT5 come chunking in with the data here like it's playing back the market. Oh, this guy just stole my Harley. That's what it's like here in the hood. My brother's got a Harley. So, okay, so the structure here is like scary for the bears. I got to move my objects around. Okay, so we got this beautiful monthly chart, and of course, a lot of people are probably bail here at the lower. Here, it's also a cycle trade, right? That's a measured move from here. Cycle. It would just be, get there before that. So the time window. I say we come back to that. Now, what is the trend? I say there is no trend. For this past 3 years here, we're just treading water here. We are getting quiet though. we're getting this hole forming here, possible fill here. We have a flat hole. It looks eager for a big run up here. Just a psycho run where the dollar just annihilates the yen, and it's not like it hasn't happened. Let's not forget these prices here. What the fuck was going on here? This when Hillary was selling Newtonium to the Japanese reactors. Here's a structure failure. This is supposed to become a bottom. Ruh-roh. Looks like this looming vacuum had a little impact there, but who's to say? Anyways, it's getting very subtle here. In the big picture, it does look like a lot of sellers here, but when this thing finally unravels, as we come out into the Trump re-election, I'm assuming we could go psycho this way. We really could annihilate, and for whatever reason, or we could tumble down. I guess I'm always bullish, but it's all right. I can see the fact that it's going down, I suppose, from your moving average. It's drifting. It's very not a strong move either direction. It's politically correct. Let's say it's adapting to conditions. What else I got? I got the gold chart too. Look at gold. Take a big picture, a line chart of gold here. Close out the video. See if this will upload. Okay, I'm gonna MT5. Disorientating. Waiting for the monthlies gold to load. Okay, so the trades available on the closing charts of the dollar. I think we just completed this into the seller's window. Anything above here, I'm a seller on gold for the pullback. I think we might have just taken a nip out of this, though. If we were going to trade this, we have to go to the 6-hour chart. So anything above there, I was a seller. How come I don't see my box doesn't go into the future? How come it doesn't show up? That price, wait. I guess I jumped too far, wait. Here, okay, so we could have scalped into this window. If we sold into that window, this is what it looked like. Okay, we were planning on selling from here to here, and if I turn on the wicks, if my stop was not wide enough, right, I got it wicked out. But the trade plan for the breakout traders is different than the trade plan for the market order guys and the limit and the people that just lay canvas an area with orders. It's different style, different approach. They both make money if implemented properly. And you could have been very aggressive and sold anything above here, which you would have got stopped out, I'm sure, of something. But if you kept that scheme up, you kind of had to get out here because now, fractally speaking, this is an auction here inside of that other one, right? Inside of the other. Okay, wait. I got to fix the scale there. I'm sitting in an awkward position. My hand's going numb here, so I don't know what the fuck that is. Square per bro. Alright, so here's the... okay, so, like I said, if you're going to trade... let's try to find a less risky trade. 6-hour breakouts. What does a 6-hour breakout trader think? Robot, what have you? Well, if I was going to do it, I'd look for a very low-risk entry. I'd look for small bars. If I'm going to directionally trade it, I'm going to assume that this is where the limit guys got in, and for me being a confirmation trader, I'm going to have to put a buy stop here and trail my protection. And I'm going to have to scalp something in. I know that this is the seller's window. And I know there'll be people willing to sell here to pull it back, to cash out to the breakout point of the original. So if I'm a breakout trader, I'm waiting for low volatility. I'm going to put a buy stop in. I'm going to put in a sell stop, maybe, protection, another lower high. I'm going to put my buy stop in on the 6-hour chart. I have my sell stop here, and I will scalp out of my first thing. I'll sell above here something because I know the sellers are going to come in. They're going to come and grab that, pull it back, scalp, and we keep going up. If I go from this to the line chart now, switch to the line chart, I can see that on the clock, if I was to look at the market every 6 hours, what would I think is an appropriate trade plan? Appropriate being the operative word. So if I'm looking for a top becoming a bottom, where could I justify that? I could say here, okay, this is a top becoming a bottom. I know this top exists. This is real. Even though we go crushing through that later on, is still a pivot of the breakout point in time, the most recent we can think of. We go crushing up in. Sellers come in just because it's new highs and pull it back, and confirmation pivot traders come in here. The breakout confirmation guys already went long here, and they're, unless they scalp something during this move, they are still holding. I'm talking about winning traders only. Winning traders only allowed. The people that had buy limits pending here on the 6 hour basis, they got their fill perfectly. And maybe it did wick down here. Maybe it did buy limits down here. So we don't know. We have to turn on the wicks to see the truth of the entry technique, and if maybe you got picked up on a limit and it was a bonus entry. Not really. We didn't really jump outside of that range. So you'd have to mark it off. This top becomes a bottom. What does it look like when you turn on the bars? It's going to be psychologically maybe impossible to imagine that trade now. This top became a bottom, and you put a buy limit there, and you put a buy limit in a pack all the way streamed down to here, say. Did you get filled on those tickets? This is a back test of structure trading. Okay, you barely got filled here. Barely, because it turned on a dime. That went down, and it opened here, and it literally engulfed. Right? But then the volatility dried up, and here comes the breakout trading strategies, which do not exist. Okay, so I'm going to mark off with the boxes. I'm going to put in the breakout strategy. Inside the structure strategy, so right here, the breakout bots, they could be non-directional, but they only filled long there. Another window for them to get in was here. Is that aligned with the same trades that the market guys are doing and the structure guys are doing? There's 3 people in on this trade, the breakout traders and the structure traders, in these 2 boxes here. And the proof is to go to the line chart and see that a top's becoming a bottom here. At the same time, you have low volatility. People are loading up here because they're not risking as much as far as pips go. And they can size bigger because they're running tighter stops, so they're running the same dollar risk because they're trading smaller when the market goes berserk. This is how not to blow up your account is the market's moving big. You got to trade smaller and wider. When the market's dead, you got to trade bigger and tighter because you're adjusting to market conditions. You can't control the market. You look forward to these setups if you know how to play them in your playbook, so to speak, if you can trade this breakout here and be like, oh yeah. And you got filled on some limits here, right? So you have buy stops here, like a good goober would, right? And you bought at the market, and maybe you had trailing buy limits here that never got filled. And this is why your triple approach is going to make more money, to trade all 3 trading strategies at once. Because these limits down here did not fill. We never retagged. Sometimes you'll wick into this and then you take off, and that can happen. Quite a bit that happens, but what if that doesn't? You have to accept the going rate of this, and you are buying at a pullback. After it goes down, you're getting the best price over the last 6 hours. Don't you want the best price over the last 6 hours? You don't want to be buying here at the worst price for buyers in the last 12 hours. You want to be the guy buying the baby sales, the come back to home plate. Here we never make it back to home plate. Never make it back. Yeah, that is just. Wait, I gotta send somebody some email. So, if I turn on the bars again, it's disturbing because it brings up all these other different ideas of how to play it. If you didn't care about volatility, it is true that you could have run a trailing sell stop system during this rally, cancel, replace, sell stop, get filled, have the market go your way, run a trailing sell stop of X, and you could write a robot that does that. But this is, and it's not a bad trade, but the drama coming out of these tight areas is pretty tremendous, and it is. It's a big move. Even this is kind of but this is where it all breaks down, because if you don't have a system that can come in and take advantage of this and see that this is the unfair value, practically speaking, in the bigger picture, as this comes in engulfs and then just never looks back. In fact, it doesn't hardly make it back to the pullback breakout point, amazingly. Okay, so let me go to the other mode, line chart, back to line chart. Okay, so, I just wanted to see if we got filled on this one ticket. Okay, so there's no wicks in there really, only from the seller standpoint. When you lunge above this closing price, you wake up into that. And there's those sells too. I forgot to point out the other side of the story here is that from this shelf here, if you notice this window, and this is pretty substantial, this 6-hour window here between these two rooftops here, anything that's a high is a rooftop, and it's this cascading down, making lower highs, leaving behind this void. When it does rally into that, the sellers come in like clockwork into that window, not able to rip it back and crush into this one, which you would see this perpetual back and forth where they crush back and forth in these vacuums like they did here, where if you're a willing buyer to buy new lows all the way back to this crush, which is canvassing this giant area to be a winner on that very worst fill here, that's a range strategy. Limit range strategy. So I'm commingling a lot of stuff, and people are saying, well, what is your strategy? I say it's multiple, because before, like say, if I don't see the market going down, I won't buy it. What I'll do is just put limits in, because I figure, well, if I miss the pullback, if I'm not here to see it, it doesn't mean it didn't happen. Just because you're not watching the market, actually watching the market doesn't make it move. I just wanted to put that out there. There's a disclaimer about the market. You watching it doesn't make it move, although it feels like it. Like you put some English on it, or lean to one side, like when you let go of the bowling ball. You let go of your croquet nuts or whatever, your croquet balls. Is this thing going my way? And nobody puts a trade on unless they think it's going to be a winner. Don't forget. The gold market looks like every other market. Oh, this could trade different hours, because this is not the same situation. And look at the story here. Now, when you take this 6-hour story, you put that on a 12-hour, if I posted that chart without telling the story of what all that means and how I would trade it, it's completely useless. I mean, I know that people will post stuff like that. Here's another, a nice pullback entry for a limit strategy is to put in limits here in this wedge, this nice sloping area here, to pile up some limits here for the easy entry. Yes, you'd have to figure out how much it would cost you for each ticket. The more tickets, the lower the risk. It's like a domino theory. You know, each domino is very cheap, stacked up properly. Some of this isn't going to fill. This wedge never got filled. You know, it's here that this got filled, right? Here's the first fill on the 12-hour gold. Tags that, rips it. But when it comes here and actually gap opens into the buyer's window, holy shit. And the scalpers are already out here as it does the engulf and just keeps ripping. Another top become a bottom. Now, it's hidden in there, and if I go to the line chart, it should jump out because I can see it already on the line chart. And of course, this is all volatility dependent because these setups look so amazing if you dial it in like this. You're like, oh, this makes total sense what's going on here. How often does this pattern show up? And look at this first sell-off into crushing here and denying the structure traders that think this is a top becoming a bottom. Sorry, no. And even the guys that are buying here are going, oh, fuck. But see, that's why you have to canvas an area and spread your risk. I would never dial the risk into a precise price. We just don't know how far they're going to rip it up, for how long above this price before they pull it back. And actually, the people that are waiting to buy here, because they think this is a top becoming a bottom, they buy here and it comes crushing back. They're not prepared for that. And maybe the answer for them is to run trailing buy stops and do a little confirmation with the little pure price. Pure price meets confirmation of market behavior, and this is also what people are waiting for. Setups on the candlesticks combined with their algorithm of their baseline, of their hypotenuse, of their sundial, of the neighbor's sprinkler frequency as it squirts with a broken head, right? With a little bit of lime stacked up on the spring, just so it just kind of nails it. Yeah, right. And that probably is a pattern for that, and why it keeps squirting that girl with the tight t-shirt. I don't know why, right? It's crazy. That trade only happens every like 5 years. But this could be a monthly chart. And if this is a monthly chart, like, who's not looking at that going, holy shit. Now, this is the 12-hour chart, and a lot of people are looking at that going, holy shit. Now, there could be, just before this thing takes off, the argument that it's going to tank. That argument was here, and that argument was correct. It is tanking. But this is a story within a story. It is so ridiculous that you think you could write a one moving average to compensate for the drama of reality. You just can't. I mean, you can't. This is safe space trading. My indicators take the noise out of the market to make it socially acceptable for me to trade the market. Yeah. But what you also get, how to deny your equity swings when you know you're in a good trade. So look at all this in the context of everything, and not to mention, I'm sure that this being the amazing gold setup, and it looks like Dalrian actually, the way it's behaving, the triangles and everything. How does that work as far as, is this a top becoming a bottom? Is this little triangle here? What is the story here? And did you trade that? And what about this? Just before it tanks like a whore, did you get in here really big and ride this down in gold? Even if you're a gold trader, did you get in here when the market was saying, well, I'm kind of dead in the water and I just don't know. I don't think I'm going to go up. Maybe I do go up. Maybe I do go down. And you just got in like a fucking idiot with sell stops and with buy stops here and said, you know, the risk is low. Just like here, the risk is low. I don't know anything about auctions. I don't know that it's underneath this floor now, looking to come back to this. I don't know about structure. I just know, hey, it's really quiet, you know. We're trapped up here in this unfair value. We could maybe go to this unfair, and I could actually get in along the way here on one little baby entry. I mean, how? Why would you want to ruin all these trade setups with indicators? And we could come back to here. Yeah, we're all going to be buying gold down here if it makes it here. I would buy gold anything below here all the way down all day long, all year long. Who is not buying gold if we ever make it back to here? Now, granted, it could come through here and just keep sweeping south, and people would say, what if that happens? Well, you shouldn't be trading. If you're not prepared for shit to go wrong or shit to not go your way, then you shouldn't be trading. So it's easy to make money trading when your trade setup is on the time frame that you're on, in the moment that you're in, and you're sized just how you want to be sized, and you're giving the market the 6 hours it needs to complete the pattern, or maybe it's going to take 3 days, and you're looking at these vacuums that are going, oh, you know what, these are real. Like, we're either going to go up or down. And if we do go up or down, how big, how long, how far, how fast? And if it's moving really fast and your target's already built into the trade plan, then you'll be out without even having to worry about it, right? Because you're not greedy. You're priced. You already you're not. You chose your greed level. You chose your exit. Now, if you're going to try to ride, and you can ride it, you see that it's unfolding the way you think it is. You may be adding on the 1 hour or the 2 hour chart, and you're going, oh, let's keep adding to this. We are not done filling this monthly void. We are in, and then it goes parabolic, and then most people get out. I get out because I realized that I don't have to trade for another 3 days now. I don't have to babysit the market. So it's a lot of work trading. You think that it's okay, so you think that you did the work because you built these indicators that are going to save you from work. It's not going to save you if you want to make money by working hard at trading. This idea that you're going to, okay, you're going to trade smarter, but you're going to trade harder and smarter. It is hard work to really more than 20 currencies. This guy, no nonsense, is trading. Dude, you just don't, you should be able to take any instrument given the spread's tight enough. Gold, all of these trades exist on crude oil. He's got this thing, well, I got this thing on crude oil. They're all the same. The pure market's Bitcoin. If you look at Bitcoin, when it engulfed the floor that it had crushed under, it just blew people's minds when it fell below $6,000. Very quick, very hard, dirty, and it fell down. It paused. It reaccumulated, and don't forget it's traded on a major exchange. It comes flying back, and it's like a penny stock. Comes flying back. Look up any penny stock line charts. Comes flying back and engulfs and goes psychotic, and then it's just in this world of, it could go to $2,000 now. It could go to 40 grand to $2,000. Like, anything can happen. 80% of the time, nothing's going on. So all the drama that's going on in Bitcoin right now, it's going to subside. We're going to start to consolidate. In wave 4, in Elliott wave 4 is the biggest, longest consolidation. 80% of the market's wave 4. That's why people can't do Elliott wave counts, because the corrections are static and uncountable. We're looking for this utopian Elliott wave. It's only psychologically Elliott wave. In other words, wave 3 is exuberance. It's a quick move. You're either going up, it's either wave, you're either in wave 2 or 3. Or wave 1. It's a 1, 2, 3 situation. Wave 4, after wave 3, it's over. All the money that can be made in the shortest period of time has been made. From either direction. It's a big price pulse. It's a climax. There's consolidation. It's just like and it's also the fulfillment of a order imbalance in a certain price area. And you can see it when you saw the dollar, when you watch the euro dollar fall into new weekly lows. That entry point there was a classic 8 pip, 13 pip, 15, 19 pip, like bam. So at that point, you see your limits getting filled that are based on your weekly charts. You can see it happen. Or you're sitting there going, oh, look at, I'm going to get in here. Because you told yourself you're going to get in there, but you don't have to be there. So I have babysat the trade, and I said I would have bought there anyways, and that's why I just put limits in. Because I don't care. I do care, though, if I am not aware of the size of the vacuum and I overload too many tickets. Now, this is why you need the 15-minute and the 1 hour and the 2 hours layered in there. So you don't expose yourself to a... so when the news comes out, you need to trade light and wide. Because you're not going to feel it. If you're trying to accumulate it, you don't want to watch the news, right? You don't want to be there. You got something to do. You go and put the orders in. Come back. Hey, you know what? Maybe they blew you out. Maybe they didn't. But watching it's not going to help the trade be a winning trade. And the no-nonsense guy he's running indicators like radar systems that are on patrol for him to catch, like Doppler 4 radar or Doppler 10, whatever they're up to. Okay. And you're alerted of rogue waves and stuff like that with like some kind of electric shock. And that's your call to arms, and it's time to get in a trade. Or you wait for you wait for double confirmation, triple confirmation, wait for the indicators to catch up to reality. And people need these rule systems. I notice, like, hey, don't screw your neighbor's wife. Like the 10 Commandments. Did you really need the 10 Commandments to know that killing somebody was... And did you know when you were a kid that maybe killing somebody that could be you're a somebody, would you want to die? I don't know. Some of this stuff's a little overrated. The rule list that people have for trading is mind-blowing, too. These, are you above your baseline? Well, she's got to be at least under 500 pounds for me to date her. That's my baseline, okay? You got to be under five bills. You mean money in my account? Well, that too. That's okay. I only rescue people under 200 pounds with under $500. They're on the side of the road. You don't see any homeless women out begging, you notice? Boy, they'd be getting like, getting paid off. Where's the hot homeless girls on the side of the road? Why is it always some dude that looks like he was put out with a fork, like he caught on fire like a pizza? That's just how life is. Why does every chart just look like a fucking train wreck? It's so cute, people will post their stuff, interpretation of reality. They see like, yeah, can't you see this ascending wedge? And look at how it changes its kind of... Here, look at this giant rally. Well, we got an indicator for that. It's called the sloping moving average drift analysis, linear regressionist. See, it called the downtrend. You see how that thing just kind of smoothed out that big, no-nonsense wave 4? See how we just took away all that problem for you. Thank you very much, indicator. Then there was this ripping move here. Well, we bought here. We're no nonsense. We bought right here on confirmation. We waited, about 6 months, but we got in. No, I'm sorry, this is about 15 weeks, but we got in finally. It was a good trade. I like that no nonsense guy. Well, some of us don't want to wait, for that. If we're trading gold up for our whole lives, we're kind of like trading this shit. Up, buy, sell, buy, sell, buy, sell. And maybe we do trade this also. But is the guy that can trade this, is he trading that? Unless he switches time frames and he can see this setup on the 1 hour chart and think, oh God, I'm going to accumulate this big drip down. I'm going to build a position during this. because I can see this every moment we tick down, this gets to be a wider hole to fill. And I'm just gonna hold on, man. I mean, I've spent all these weeks just buying on dips and just building a fucking position in gold, like, based on the stop hunt on a higher time frame. So I put on the bars here. I go to bar mode. And here the argument is I'm going to go to the monthly and go for a heavy zoom in and mark off the buy zone area first. I'm buying everything below that price. So I keep buying indiscriminately because I'm not going to discriminate. Anything lower than we are right now is a good price. And so anything lower than this, I keep buying in this window. So buy, scalp. We scalp to the first exit. And we dip below the window again, we buy. We buy below. We buy in this window, we dump out of it. Anytime it gets into our double buy window, so this is where you would martingale in, so to speak. The double buy window is going to be anything below here. So that involves also, so this is definitely where we're going to load the wagon, but there's another window. And I think this is the problem is that the market leaves behind these windows that live inside of another window. So inside of this window lives, well, after we cleared this out, it's this rally that caused this little trailing mini vac that's tradable. Also, it's looking to get filled here. And it's cleared out the rooftop that lives between here, this big shelf, right? It's kind of funny how the market keeps poking into these voids and then it's satisfied and it comes after this void. It's void to void. And the pivot is low volatility. When the volatility gets low, there's a high probability we're going to crush up into a hole like this, or we're going to crush down, but we end up crushing up, and then once we fill that hole, we're going to go sideways, and then it's off to this crush. Then we consolidate. The range traders are in. The structured traders are in on this trade. We ride it to the fair value to the middle. The people that take half of the trade-off are getting out. All those people are causing the market to behave the way it's behaving because, and as the volatility dries up here, and maybe there's guys that have buy stops from here or they've just left them in place. Curse the thought. The ideal thing is you keep moving your stop and truncating and getting tighter and tighter and the market gets more and more she loves me not situation. The volatility is drying up. And then someday, somehow, some way, we start to crush. And the first time we breach into this and no sellers come in and we have to crush out everything, we're going to take out this wedge. This is the wedge we're clearing out, which happens pretty quick and dirty. This is a very thorough house cleaning of that. So there is a point where you could counter trade that or scalp that back to, you're kind of coming back to this high now. Right? So these highs still matter. After we blow them out, this would be the confirmation entry point. And it is the confirmation entry point for the guy that is looking at the structure of the 12-hour chart on close. His view is, okay, I wish I could delete all these objects. I don't have my script for that. Delete all objects, so I got to look at the list and stuff. And list all, yes. But how do I delete? Is it like Control All? Does that work? Oh, okay, perfect. Okay. So, oof, I just lost my perspective there. I kind of wiped everything out. Wait, please hold. Wait. Okay, so okay, I was talking about the structure on the okay, tops become bottoms. Right. This top for the confirmation traders, they're looking for that to be a retest point. Close above it, come back and close to that level. Let me see what it looks like on the wicks here. So, see, this is a different trade. That's a closing price trade. Here's the true price. Here is the true highs. And the scalpers did make money on selling new highs here. If you can see that if they sold this area, they were able to pull it back deep within a deeper structure on the line chart. So we go to line chart and mark off the so-called last known top, which is right here. So it's kind of complicated to see how this thing unfolded here, but this is the window. Since it closes here, this is based on the bars. So you probe into that window. Sellers get filled. They're able to pull it back into this window down here where the willing buyers have their pending stacked up. They have limits in this. Right, this is the buy low strategy. Even though you didn't sell up here and take the risk of putting sell limits above here for that, and this was supposed to pull back to here and keep launching, which it could do, it has done, but it's crazy, right? It's a crazy price. And they don't just pull it back to this point. They pull it back. Okay, it's kind of hard to, I got to go to the other time frame to see where that, I have to go to the daily chart now. Okay, so this is supposed to be the first breakout point, was taking out this daily. So that was a big deal. But if you were going to sell that window, right, so everything above here, you were willing to sell. Plus, here's where you would so-called martingale in, is you're going to sell way more up here. So you sold above this pretty decently, but very heavily here. And I'm presupposing that you had something built in to take off the table as it came pounding back. 2. As deep as, now I got to zoom in. These people, man. So, okay, so it's, and this is still in the daily chart, so it's a pretty amazing pullback. Certainly the eager guys like me are buying this on limits. And this is probably where you would scalp out, or you would take your first profit and maybe start taking your profits as you start hitting the other guy's entries. So it should be a revolving door. It should be a perfect world. Everybody should agree about the trade that is tradable. You know, from the guy that wants to buy this, he never gets it. He has to settle for this void on the pullback before another big rally. And of course, there is the guy that sold this next sell window. So not only was there this trade, but there was this one. But here's when that scalp becomes just a scalp now, because this is a real breakout pullback run up at this point. Going back to the line chart, we can see the true story of price over time. This top becomes a bottom real subtly here, and we have the lack of volatility, and now look out. Everybody's like, I don't think this is going down. And how did they know that? Because this failed sell-off, and we're not seeing anything come in here. Inside of here, this has probably got a beautiful triangle on the whatever have you time frame 6-hour chart. This is a daily breakup pullback. So I think you can see inside of every pattern. People say patterns don't work. Yes, because they're not working on all time frames. And how often does that pattern show up? And are you in front of your screen? Did you plan properly? Are you going to trade really big on this pattern because it's really got a high probability thing? Did you just lose and now you're afraid to trade? Did you just Did you just say, you know what, I give up on this shit. I can't take it. It's too much work. But I kind of enjoy it because, it's like this bad relationship. It's like being married to a psycho babe in a way. So I kind of enjoy that. I kind of miss the in the flesh psycho babe. So the market's a great replacement for that because it's a gift that keeps on giving. And if you can go against the herd and just kind of just trust that you're okay risking $20 per trade and you're only going to do 100 trades a month, so you're going to risk two grand a month or whatever it is. Whatever this number is for you, maybe you just want to trade on demo. You find it's like playing online cards. Maybe online cards is different than in the flesh cards because some people play cards because it's a social event, and there's social trading. And then there's people that are posting stuff and they go, oh, this guy, yeah, those are analysts and stuff. And sure, we can analyze these markets till kingdom come, but the tactics that we use to get in and on the market, and is it okay to do a trade where it's a dumb trade? I think that is a problem. For me, to do a dumb trade, I feel like I should do the dumb trade and a smart trade at the same time. And maybe the dumb trade works out. And then it's kind of shameful that trading attracts people that are typically above. They want something more than just their day job. Also, they may be pattern-orientated people that see opportunities and patterns. They may be people that see the leverage as opportunity and all these things, right? And they just want to get away from their normal routine, and they just want to try something new. Yeah, you can do the no nonsense approach, which is the radar system. Okay, I get it. You built this baseline and you've got this filter. You got a moat around your house, but you're missing out on the hot babes that stumble into the wire fence that you put up. See, now I'm putting up the wire fences. I'm saying it's okay to get in multiple approaches. This singularity approach of like, no, I'm waiting for the 618. For God's sakes, get the fuck away from my chart. And let's hope the news doesn't ruin our charts. The idea that the news is ruining your setup or your chart. The setups are always in front of us. We can see the void. Is fulfillment for a void buyer. It is fulfillment. The news is fulfillment of their orders. It is not ruining the charts. For an analyst, it's ruining the chart. Especially if he draws trend lines on wicks, because now the volatility, that's not a trend line, that's a volatility trend line. That's a hybrid line that's going to be wiped out. That analysis is wiped out by the news. It has ruined your chart in a way. The cloud trading thing, these are filters that are put on to say, like if you had a prenuptial, I won't rape my neighbor's wife. Honey, we had to put it in there. You know how you are. You know how you get frisky with the neighbors. You're always asking if you can borrow some sugar and butter. We're worried about you. Yeah, the neighbors have been talking. Tongues are wagging over the fence. So, yeah, I think gold's a sell here for a pullback, but of course, all this stuff, is so dependent on the size and the time frame and your exposure to the market, and if you even want to trade in the first place. But I think that if you're going to trade the market once a week, I know people that would be completely happy looking at closing prices at the end of the day. Yeah, so I know this girl that crosses off half the day. She does this X on the day, So the days she's going to work, she puts an X there, half an X. And if she works that day, she does the other half of the X. It's like a hangman thing. This person could trade a daily chart. I could say to them, look at this. Here's what's going on. We're waiting for the market to come back here. We need to place orders here. Okay, nothing, no problem. I say I probably want to put a cluster of orders in there. When the account gets a little bit bigger, we're going to put in more orders, slightly different orders. We're going to write new scripts. We're going to have new stuff to constantly diffuse the risk and impact of a singular price entry. We're trying to get away from precision. We're trying to go into a slop whorehouse method. Our business model is we've got ugly girls, we've got hot girls. Some guys like ugly girls. Go figure. Actually, I always kind of thought Sandra Bernhardt was hot because she had diastema. So, because she would look like train wreck hot. Like, there's something wrong with you. Like I said, the girl today at the coffee shop, the terrorist girl that kept coming in and out. It's like, I kind of like feel like Patty Hearst. It was like a Patty Hearst event. But the market is so got this character to it, and it's like misbehaving, and people say, well, I don't like that dollar CAD market. Well, that is a very rangy market. So the dollar CAD trades are really these sweeping, bold 50 pip moves and smash up, smash down. It is not compliant with somebody that has built a robot that's some trend bot. I just think a dollar CAD would destroy a trend bot, but not a view of trend from a structural standpoint of somebody that's going to look at it and go, okay, listen, what's going on here is only available. Those setups are only available on the 4-hour chart or the 3-hour chart. And this, when you go to MetaTrader 5ville, you're really going down a rabbit hole of like, have you seen the 2-hour chart? Yeah, I know, but of course now the risk is higher to enter on the 6-hour chart because you need wider stops based on the wicks and where those are at. But you can see your trade plans on the 2-hour charts. If you zoom out to the 6-hour chart, you're like, holy shit, they're probably going to blow me out of some of those trades. Yeah, they probably would. If you set up 200K in staggered things that last every 4 hours, technically speaking, for the next 4 hours, you're risking $200 or $300 on a scheme that has all these embedded orders. But to me, that's how I do it, because I don't have a choice. I don't really have a crystal ball to say that we can't pull back 14 pips in the next 2 hours. And if we do, I'm bullish. I like this for if it's a range trade only. In other words, I can still range trade even though I don't know where the market's going. Because if they do sell off and I'm accumulating in a gradual manner, so my first entry would be maybe at the market just so I know I'm in the market. And my subconscious says, you are long. It's okay, you're in. As I see them fill my bucket of tickets, okay, I'm thinking, man, I'm sure glad I didn't buy a lot at that kind of up, kind of chasing the market price. You're chasing the market. This is when I saw the Forex Hangout guy try to go, he's chasing the market. He's not getting the stop punt entry. He's not getting that amazing psycho against the counter trend move that is the better price. Although the other side of the argument is turtle traders made money chasing price. Yes, they did. Turtle traders made money chasing price till it backed up on it, and then they blew up the whole hedge fund. They just got destroyed because the character of the market had changed. Well, how do you know what the character of the market is? It's obvious. In the moment you're in, if it's going really up, if the last day it was up more than it's been up in the past 3 weeks on the time frame you're on the 4-hour chart, if this is the biggest move in the last 5 years, then maybe you need to trade with wider stops if you want to just wobble into the market like this Lucas technique where you just get the fuck in and you deal with it. It's also the technique of the guy that trades without stops at all, this Michael Norman guy. He's trading like a fucking psycho bandit, like 5 Spazzarellas stacked up into one. Right? So I'm hearing the ads on the radio. Gold, There's this ad, I don't know if this is true, but there's some guys running an ad that says Trump is going to like make gold the standard and stuff, and that's what you really got to get. I've not heard anything about that, but maybe I'm not watching the proper, what is it? I keep teasing the bass player about this gematria shit. Gematria meets Forex. I put my Fibonacci's on my gematrias, and they're fucking coming in. I'm getting amazing trade signals. Like I'm telling you. Okay, so that's. I think I'm short gold right now in my mind's eye. On the weekly gold chart. Wow. And here's another example of a measured move in the market. Perfect symmetry. Smash up, doji out, smash up. Boom. I think we could drift, but I think Chopsville's coming for gold. I don't have much up on this thing. Here's the British pound. Fell through the floor again. Another buying opportunity for people with giant testicles. On the plunge, any of these plunges, right? Any of these plunges. Here's I have 14 period CCI in here, just default out of the demo, but here's your signal. Moreover, bought, price is lower, time to get in on the short side, right, compared to that. Here's a triple divergence, right? No divergence here, but what a great buy, right? Because you're buying because of this. You're buying because you're dipping into new lows here. Buy because you dip into new lows. You sell because you're dipping into new highs here, right? This is the failure window. Maybe you're long all the way down here. Here's where you get annihilated unless you can scalp these moves. And then here you kind of got to trade the others. You got to trade the other side here. You got to be willing to sell this heavily. And this would offset the fact that you got to be able to be flexible and shift gears. Maybe you did buy this and you're still underwater right now. I can see that. If you bought here, all the way down, and here you bought even more on this wedge, you really loaded up. You're probably about to scalp out of, and hopefully you bought more down here. You're adding to a loser. You're losing into this. You're adding to a loser. You know it because you added to this loser and it became a winner. Now, if you added to this loser here, people would say, what about this? Well, hopefully you're running your breakout strategies on the dojis. So if you're not running your breakout trade plans, yeah, you're going to get killed. So you're buying on limits. You need to go against yourself here. Unless you're going to put in seriously light orders here. If you're going to go long on your dojis, right, you're making money on these dojis here. It's probably not easy to see. Wait. Hope your screen's bigger than mine. Okay, so I know I just rifle through this shit, but I guess I've looked at it for too long. Just like the euro dollar, we see this sideways treading water here. Right? Is this the floor? Well, it really is, isn't it now? This broke out here, and guess what? That's confirmed. It's a confirmed breakout. This is a combination of so much stuff here. And you just keep banging on that. The flag traders are in. The structure traders are in there. Confirmation people. Trend traders. They think they see a trend here in the 12-hour British pound. It's going to keep tanking. And, there's people that are willing to buy down here in this fresh territory. And it looks divergence on CCI. What could be better? Those guys are buying. Then we go rifling through this wedge area. Clean house. The scalpers gobble up that. pull it back only to here, makes it back to this last known breakout point, right? This is still the breakout point from this breakout into this hole. Come back, and this is where buying with tight stops every 12 hours it's down. That's your buy at the market plan. Every time we are in a bearish candle, we buy 2 buys at the market. We have buys on structure. We have buy stops stacking up for confirmation entry. Boom. Everybody's happy. We come up in this window. Everybody cashes out. They come back. They pull it back. Go other way into this little baby auction. Come back to here. Another sellers come in again. But see, this story compared to this story, same sideways story, and this bottom becomes a real issue. We can't get above this on close, right? So if you go to the closing chart, it would jump out at you. And this is on the 12-hour chart on the British pound. I mean, who's watching all these time frames? Who's doing all these trades? Not me. But these are valid trades. Bottom becomes a double top on the 12-hour chart. Structurally sound entry. We are expecting a fill of this or a fill of this hole. Does not happen. This is an instance where we come back, we retest this double top, buyers, not enough buyers came in, and we keep collapsing through. Like I said in the other video, we don't have to go like this. Although we could go like this just as fair, right? 2 roads. The other could take the other one just as fair, and but you took the other one to blow up your account. So this wedge here gets filled, easy to see here, and then of course either way tumble down. Divergence here in CCI called out perfectly right by that wonderful CCI genius trade. Their divergence. Got that. And that's the structure on 12-hour. Took the noise out. Here's the unfair value window. People are buying it, and they ride it up. They dump it. A lot of people getting out here because of that. And a lot of sellers up in this wedge. So this wedge is different. This area that gets cleared out. And people probably bought here and they're long gold right now. And I wouldn't blame them because, now it's probably going to range. And if you gobbled up this, you're underwater in this ticket, but that might become a winner if we can eclipse this and start to go through that hole. So it's void to void. So that's it. I don't know if that helps, but that's my thumbnail sketch of reality.